Hi everyone, Mike Riley with Gaining Altitude Financial, and today is March 2nd of 2026, so it is the last day for making RRSP contributions to your 2025 tax season. So by the time you're watching this, it will have been too late, so that's not the purpose of this video. But when I have this conversation with people, they do recognize that when you make an RSP contribution, that it does lower your income reported for that tax year, and that is intended to provide a tax refund because the assumption is that you paid tax on money that you will earn down the road when you retire. But there are some specific strategies around the planning that we do for this because, of course, there are different amounts of tax that are paid depending on your income. So I thought I'd take a quick minute or two here and just go through the basics of how the bracket system works in Canada. So within Canada and the provinces, each organization has their own tax levels. So what I've done here is try to average them out for some fairly simple math. So obviously this is not accurate. Please don't send me a message saying that I got the numbers wrong. It's really more for illustrative purposes. But the way that it works is that for every dollar up to a certain level, you get taxed at a rate, and then every dollar after that level, you get taxed at a different rate. So when you are earning money, the first $16,000 approximately is tax exempt. So everybody gets that first amount with 0% tax. Then after that, from $16,000 to $25,000, every dollar in here gets taxed at 15%. And then, once you are earning more than $25,000, every dollar in this area here is going to be taxed at 22%. So that dollar at 22% up to $40,000. Again, these are not the actual numbers, but it's a close approximation for most people. Then at $40,000, it's taxed at 22%. Up to $50,000. At $50,000, the next dollar is taxed at 22%. And that's what's important, is it's the next dollar. So it's not like you go up into the next bracket and it triggers and that cascades down to every dollar beforehand. It's just the next dollars in. So the reason that's important is when we are looking at making contributions into your RRSP, if you are earning $42,000, or actually let's do it at $50,000. If you're earning at $50,000, you're going to be paying at a 22% tax bracket for those dollars. So if that $2,000 is money that you can then move into an RSP, that moves you back into that 40% bracket. So every dollar you're only paying at the 20% rather than at the 22%. So you're going to save a little bit of tax money by moving from this category down to that category. And that's really all we're trying to do when we do RSP planning. Does it make a huge difference in your overall tax consumption? For most people, it doesn't. There are numbers beyond here. Once you get up over $100,000, it becomes a much more significant picture. But what I wanted to share with you is that concept that the tax system is only on the next dollar up, not on every dollar after. So sometimes people are disincentivized to earn more money because they're concerned about paying more tax. That more tax is only on the increased dollars that you earn if it moves you up into those next levels. And if that's a concern, we can certainly talk about reducing your taxation by making investments in things like the RSP, First Home Savings Account, etc. So I hope that's valuable to you. If there are any other topics you'd like me to cover off in these videos, please message me or put them in the comments below. So it'd be great to spend some time with you here at Gaining Altitude Financial, where the sky is the limit.